China is the most populous country in the world. It has a population of more than 1.4 billion people. Did you know that China has 5 geographical time zones? And borders with 14 different countries? Well, you can imagine how big China is. China is the second largest economy worldwide after the United States. The economy is continuously growing, but a few decades ago, China was not a big player in the world. What changed? How is the economy growing so fast? Is it good that the economy is growing in such a rapid tempo? Stay tuned and learn more about the economy in China. Welcome to the Egocation channel, where we keep you informed of all major politics and economic subjects worldwide. Don't forget to like and subscribe to our channel and press the bell icon to never miss an update. China's economy changed a lot since 1979. Prior to 1979, Mao Zedong had the leadership over China, and he maintained a centrally planned economy. The state controlled prices, set production goals, and allocated resources throughout the economy, so basically, a large share of the country's economic output was controlled by the state. During the 1950s, all of China's individual households' farms were collectivized into large communes. In order to support rapid industrialization, the government invested in physical and human capital during the 1960s and 1970s. This resulted in the fact that nearly 75% of the industrial production was produced by centrally controlled state-owned enterprises, which stand for SEO by 1978. Private enterprises and foreign invested firms were generally barred. An important central goal of the Chinese government was to make China's economy self-sufficient. Foreign trade was generally limited, but was permitted in order to obtain goods that could not be made in China. These kind of policies caused a lot of distortion in the economy. There were no market mechanisms to efficiently allocate resources, since most aspects of the economy were managed by the central government. Thus, there were fewer incentives for workers, firms, and farmers to be more concerned with the quality of what they produced or to become more productive. After all, the Chinese government did set the production goals for the economy. But what changed during the economic reforms? In the beginning of 1979, China launched several economic reforms. The Chinese government initiated price and ownership incentives for farmers. This made it possible for farmers to sell a portion of their crops on the free market. On top of that, the Chinese government introduced 4 special economic zones along the coast for the purpose of attracting foreign investments, boosting exports, and importing high-technology products into China. Economic control of various enterprises was given to provincial and local governments. They were allowed to operate and compete in the free market principles, rather than under the control of the Chinese government. Also, citizens were encouraged to start their own businesses. State price controls on a wide range of products were gradually eliminated. Besides, trade liberalization also contributed to China's economic success. Removing these trade barriers encouraged greater competition and attracted foreign direct investments. Since the introduction of the economic reforms, the Chinese economy has grown substantially faster compared to the period prior to the economic reforms. In the period from 1979 to 2018, on average, China's annual real GDP growth was 9.5%, which means that on average, China has been able to double the size of the economy in real terms every 8 years and helped raise an estimated 80 million people out of poverty. China has become the world's largest economy based on purchasing power parties, merchandise trade, manufacturer, and holder of foreign exchange reserves. This has made China a major commercial partner of the United States. Also, China is the largest foreign holder of U.S. Treasury securities. This helped fund the federal debt and kept the U.S. interest rates low. But now, recent messages have shown that China's economy is slowing. Could this be a worrying sign for the world? China's GDP increased just 4% in the last quarter of 2021 compared to 2020. This is the slowest pace in a year and a half. Although the economy expanded 8.1% in 2021, weakening growth in the last months of 2021 suggests that the trouble is still on the horizon as the country contends with a deepening real estate crisis, renewed COVID-19 outbreaks, and Beijing's strict no-tolerance approach to controlling the virus. As said, the overall growth in the economy was 8.1% higher than in 2020. Much of this growth was in the first half of the year of 2021, as COVID-19 restrictions were getting loose. China's leaders are worried now the economy is slowing down. The measures they have imposed to address income inequality and rein in companies are part of a long-term plan to protect national security and the economy. But China's leaders are wary of causing short-term economic instability. But China's leader, Xi Jinping, is optimistic. He recently said at the World Economic Forum virtual session, "We have every confidence in the future of China's economy." In contrast, Xi Jinping could face some of the biggest challenge since Deng Xiaoping imposed the economic reforms. Because the growth of the economy is slowing down, demand is slackening, and the debt levels are still at near-record levels. Besides that, the economy is slowing down. China also faces the problem of a rapidly aging population, which could create an even greater burden on the economy and the labor force. The National Bureau of Statistics published that China's birth rate is falling and is now barely higher than the death rate. The trend we see worldwide is that the costs for raw materials have risen since the pandemic, causing private sectors to struggle to survive. This is a big concern because private sectors are responsible for almost 60% of the output and nearly 80% of urban employment. The Chinese leaders are aware of this problem, and the premier Li Keqiang promised to further cut taxes and help the struggling small businesses. In addition, the Chinese central bank reduced the interest rates by 1/10 of a percentage point for 1 week and 1 year lending, which could help reduce slightly the interest costs of the country's heavily in-debt real estate developers. You might have seen in all last year, China Evergrande Group was facing problems. It is the world's most in-debt property company, with more than $300 billion in total liabilities. The situation worsened after they missed a crucial repayment deadline. The crisis has spooked investors who fear contagions across China's properties and banking sectors. How did it come so far? Well, Evergrande expanded aggressively to become one of China's biggest companies by borrowing more than $300 million. Recently, Beijing imposed new rules to control the amount owed by big real estate developers, and of course, this had a negative influence on real estate companies. These new rules caused a situation where Evergrande offered its properties at major discounts to ensure money was coming in to keep the business afloat. But now, the company is struggling to pay interest payments on its debt. Besides Evergrande, there are more real estate companies who are struggling to make their interest payments on time as bond investors become more wary of lending money to China's real estate sector. As a result, real estate companies try to conserve their cash and are starting fewer construction projects. This is of course a big problem for the economy. So, despite China's better-than-expected growth last year, the Chinese government is on high alert for economic downturn. Think about a shrinking populations, rising local government debt, and a real estate sector slowdown. Many analysts say that the annual economic growth is likely to slow to 5% in 2022. Previously, it was thought that the Chinese economy would become the world's largest economy by around 2030. According to Li, China should not pursue global hegemony, but China should reduce the tensions with the United States. He said, "China and the US should not play a boxing game. We should play a track and field competition. That is to say, to win the game in the future by becoming a better self." On top of that, Chongyang Institute issued a report urging the United States to turn its China economic policy from decoupling to recoupling, separate from politics, which would allow a wide range of cooperation from pandemic control to infrastructure construction. What are your thoughts? Will China and the US re-establish a good relationship? How does the real estate sector impact the economy? Will China become a bigger economy worldwide? Or will China's economy shrink? Let us know in the comments section. For more interested topic of worldwide politics and economic subjects, like, subscribe, and put your notifications on in order to always be updated on what's going on in the world.